We spotted an unusual trade on Spotify stock, ticker symbol SPOT, pun intended. And so in this video, we will analyze this unusual option activity to find out how wealthy investors are trading Spotify for earnings, which reports tomorrow morning, July 23rd. Are they bullish and buying or bearish and selling, so that we can also trade in the same direction to make money while the rich are getting richer on Wall Street? Because as we all know, the rich have more access to information, sometimes leaked insider information, such as earnings reports, to make better financial decisions. So without further ado, let's dive into the data as usual. As we can see here on the option time and sales tape, we spotted these unusual trades at 12:34 p.m. at the 58-second mark. You can see these trades over here. July 26 options, 315 strike calls, 295 strike calls, and 335 strike calls. Now, what's unusual about this trade is you can see that this is a ratio 2-to-1 here, because you can see 990 contracts divided by 2 is 495. And so because we have a lot of experience analyzing this type of data, we know exactly what this wealthy investor is doing. This is what they're doing. For the July 26 options, you can see here at the 295 strike calls, they are buying these, and that is why we are also in this position. We know these are opening trades, volume much greater than the open interest. And we can see at the 315 strike calls over here, they are also opening these trades, but they are selling these call options. And that is why this color is red, because we are also selling these call options to open, clearly opening trades, since the open interest is much less than the volume. And over at the 330 strike calls, we can also see this over here, 4,900 volume, much greater than the open interest of 1,000. These are also opening trades, and they are buying them just as we are. Now, if you recall earlier, there was a ratio on this strategy, and so this is what the strategy is. At the 315 strike calls, they are selling 2 of them for each of their trades, and then they are buying the 330 strike calls and the 295 strike calls. And so when you analyze this trade, you can see that this is a butterfly strategy. Each trade costs $420 of debit, and most importantly, you can see from this risk profile profit loss graph, x-axis is the share price of Spotify. As it goes up, this trade strategy increases in profits because this is a bullish long trade. We can see from the Greeks here, this is a positive delta trade. So we know that this investor is going bullish long on Spotify. You can see here max profit on the blue line at about the 315 share price. We could make $1,575 of profit per trade. Okay, and that is more than 300% profit, because we spent $420 for each of these trades. 1,575 divided by 420. Risk to reward ratio of 1 to 3.75, meaning we could potentially make 375% profit on this trade. So the risk reward is very much in our favor. But keep in mind, this is a lower risk trade because it is earnings in comparison to the trades that we share on our website. If you're interested in those higher chance of profit trades, make sure to go to our website. We'll put a link at the top here. Let us know in the comments below, do you think Spotify will go up for earnings, or will it go down? As usual, please smash the like button, subscribe if you haven't. Take care and have a great day.